I'll put it to you this way, man. I remember vividly when gold finally broke through $400. I was a very young man at that time, and gold just forever was between 250 and 375, 80 bucks. And just like we see right now with, when the market was trying to break through 2,000 in gold, or when silver is trying to, break through 44, it keeps coming up, and it would just bang its head against that resistance. And I remember it finally breaking through 400, thinking, my goodness, here we are at 400 bucks. And then it broke 850, like, oh my God, we're finally there. We're finally at all-time highs. And if you would have told me that we would be at nearly $3,800 on gold, and really no one hears about it, you rarely see it. Yeah, you see it on the ticker a little bit on CNBC or Fox, but it's not discussed. Jim Cramer, this idiot, just comes out and makes a tweet saying, I just wish we'd stop seeing all of this, irrational speculation in gold. And I'm thinking, you're just a moron. Where have you been the whole way? And is it irrational, or is owning stocks at the highest level of valuation ever, with the largest allocation of the retail public ever, and the largest margin participation by the public ever, and the largest option participation by the public ever, as the inside money is going the other way? I mean, the guy's just an idiot. But this is why people don't get it, because unless you're spending time watching Liberty and Finance or Miles Franklin or Peter Schiff or any of the people out there that are doing this work, Vince Lancy, I mean, there's so many good ones. I don't mean to disrespect anyone by not saying Gregory Manarino. I mean, the list goes on and on and on. And if you're not paying attention, you don't see this. You don't get it. You don't know it. You may hear this and that. You may go try and buy a necklace for your wife or your girlfriend's, anniversary or whatever. And realize, wow, gold's expensive right now. But people at large don't understand it. They don't view it. It's become so removed from the collective conscious of the public. And so, yeah, I mean, the big money is waking up to it, no question. And when I say big money, I think there's a duty when you have that kind of money to think. And I'll tell you that, and I mean, I'm serious about this. Where do you put your money at a certain point is very difficult, right? You got interest rates that on the short term, the very short term interest rates, which are coming down. I think you'll see the opposite on the 10-year. Will move the other direction, just like it did before, just like we see in London, where they've lowered rates 7 or 8 times, and yet their 30-year Treasury is pretty darn well near its all-time high. The bond market controls the back end, but I wouldn't buy the back end anyway. I would own some 6-month Treasuries or shorter duration, and those are coming down. Where do you put your money when inflation, the real level of inflation, is far greater than the interest that you're receiving for something as safe and liquid as a Treasury? What happens if Trump gets his way and they lower rates 200 basis points to 2%? And the CPI, which is at 3.1% right now, is actually higher than the rate that is stated. The big money won't stand for that. We know that the CPI, because you've had John Williams on this show, will tell you it's 11% right now. Add an 8 to it, the way it used to be measured before they changed it. Point of it is where do you put your money? Stocks at all-time highs, bonds at not quite all-time highs, but losing demand rapidly. So much so you create something called the Genius Act, which it is kind of diabolically genius, to create synthetic demand for U.S. Treasuries, because the organic demand is waning. Where do you put it? You put it in real estate at all-time highs. You put it in banks that are over-leveraged and undercapitalized, where you are now a unsecured general creditor with bail-in laws. So, yeah, I mean, I think there will come a moment where the public at large realizes this, but the big money is asking these questions every day. What do I do with all this money? And no one would have ever thought that having that kind of wealth would be such a pain in the ass, such a difficult thing to safeguard. And as you get older, you're more concerned about protecting than you are making, because, you're thinking of your children and your grandchildren and how do I pass it on appropriately. interest rates spike in an environment where there's that black swan. Well, the banks are in trouble, the insurance companies are in trouble, the bond market's in trouble, the stock market's in trouble, real estate's in trouble. Where do you go? And I think people are realizing this. And, it's kind of a softball question for a guy that owns a precious metals company. But if people haven't figured out by now that I try to be as genuine as humanly possible, that I do as I say, they never will believe me. I will just simply say, to me, there are very few places where I think you can safely keep your money with a high degree of liquidity, where the biggest money in the world is showing you through their actions where they're going. And I think you will see that public catch on. But typically, the big money, well, they do this in the cover of darkness, where you got guys like, Jim Cramer, moron, saying, it's too speculative, it's frothy. They're not looking at this the right way, and they're not really part of it. But there are a lot of people who are clued in and understand where we're going and what's happening, that are buying gold and silver as a life raft. And that's the way that I look at it, but not just for an emergency, right? It's for an opportunity as well. And maybe having that dry powder in the form of something that is keeping its purchasing power against a dollar that's down 11% this year and gold up over 40, it's keeping its purchase. You go back as far as you want, and I can make this analogy in real estate and in anything. Gold maintains its purchasing power, and most other items across the board, from food to energy to real estate, measured in gold, it's becoming cheaper and cheaper and cheaper as things measured in dollars are becoming more and more and more and more expensive. You can pick anything you want. Automobiles, college tuition, and I have an answer for it. And that's the scary thing. I wrote one thing down to kind of show that. It just kind of caught my attention. And it's just very simple. In 1978, a student working full-time summer job at the minimum wage of $2.65 an hour could earn roughly $1,378, which was more than enough to cover the average tuition and fees of $688 at a public university. So when you talk about inflation outpacing standard of living, it's extraordinary. But if you look at gold at its value since then, since 1978, when it would have been priced at, I don't know what it was back then, a few $100s anyway. But point of it is that, look at where gold is today from where it was then. In fact, let's just look real quick just to make the point. We'll see where gold was in 1978. What was average gold price in 78? Was $193.4. So if you are earning minimum wage and you're able to make, what did they say, 1,378. So 1,378 divided by 193.4. You would have bought 7 ounces of gold with your minimum wage summer job that today would be worth $26,000. So that would cover your tuition in most public schools. A lot of the highfalutin ones are going to be 3 times that, because college is probably a poor example showing how much it's outpaced itself. But point of it is that, what is $1,100 worth in fiat versus in this term. I just think it's important to understand that gold and silver have done a wonderful job in the face of a dollar that is destined to continue to lose purchasing power and probably accelerate, because that's the whole premise of what they're trying to do, not only of what Trump wants to do, but Stephen Murin, who's now on the Fed and the architect of the Mar-a-Lago Accord, which speaks of a weaker dollar to stimulate and bring back manufacturing. So yeah, saving in dollars, you're destined to go broke, period. Silly. Luck. Instead, cost average. And if you have $100 to spend waiting for it to pull back, instead spend $25 a week for 4 weeks. You'll smooth out the uncertainty. The people who are talking, the talking heads saying that gold and silver are top heavy and are going to correct, maybe it is, maybe it isn't. Maybe this time it's different. I mean, when you get to the end of a cycle, like we're seeing right now, a monetary cycle, maybe a reset, a reshuffling of the monetary deck, where gold and silver are becoming more central to, I think, the plans. Silver for national security on many levels, and gold for the backing of a new monetary system that is one that's built and centered around trust. Waiting for that pullback might be silly. You might turn out to get really lucky, and maybe it is a great thing. But instead of putting all your chips on red or black, why not just cost average your way? And that's probably a more measured, safe way to make sure that you don't miss out. And in retrospect, which is always hindsight 2020, maybe it would have been better to wait, maybe not. So I would choose to fall on the side of cost averaging in smaller amounts, which you can always increase your speed at if you feel the need to, or you see something that concerns you, or slow it down. So that would be, I think, a more prudent way to proceed rather than speculating, if you will, on something that you want to have in your portfolio. I just think that we are entering that phase right now. Usually I go back through my career, and Labor Day is usually that moment where things start to change, and we're here. And I think we're in an environment where everything seems to have accelerated. Just life has accelerated. Craziness has accelerated. And I think this is going to continue. I think that we are at that point on the curve where things are going to start to not only get crazy, but get magnified. And when you realize that all of this move that we've had, where silver has outpaced Bitcoin, silver and gold are roaring and no one knows about it. You get the public involved, and the biggest issue people will have, which has been a non-issue for over a year now, a year and a half, that's all I've talked about, is how crazy the availability is and premiums being so low. You're starting to see premiums creep. You're starting to see more people, bigger money start to come in. All it will take is one event, and this market, which has been characterized by over availability and low premiums like that, will change. And you've seen it with your own eyes over the last 5-6 years that we've been working together closely. Granted, that was somewhat related to the pandemic, but I would say look at Silicon Valley Bank as a better example, where Miles Franklin added 14,000 clients in 45 days, where we were working, yourself included, till 10, 11, 12 o'clock at night, and just had to stop in order to eat dinner and rest for a little bit. As crazy as that sounds, it's true. And that's the kind of, I think, demand we will see when people realize that, the stocks that they own are at all-time highs and the insiders are leaving, that the bonds that they own are losing demand globally. And I would not be surprised one bit to see bonds be a 4-letter word. Well, it is BOND, but a real nasty 4-letter word by the time it's all said and done. And I don't know. I just think it's time for people to own some gold and silver in their portfolio, because it is wealth that is simultaneously no one else's liability, that the biggest money in the world has been buying for years, and now the biggest and most well-informed institutional traders in the United States are doing it too. And who they are is another issue. Who is it? Why are we not hearing these massive deliveries that are just literally record-breaking, it seemingly every month? No one's talking about it. That in and of itself, another contrarian indicator. And these are the people who spend billions of dollars. They do not do these things just for the hell of it. My guess is they understand where we are going, whether they have the roadmap to it or have been, cued into the roadmap. I think you do what the biggest money in the world is doing. Stop listening to the Jim Cramers and stop listening to your advisor and trust your gut. in the end, I think you'll be glad you did. And instead of jumping in with both feet, as someone silly enough like myself may do, I would say cost average your way through, and you'll end up smoothing out that uncertainty curve, since really none of us have a crystal ball, at least any that work. And do a little bit of research like you do, like I do, like your dad does, like anyone who's on YouTube does. And if you do enough research, you come to the same conclusion we all have, that really it's silly to not own any. In fact, you look at things, the world, very differently. Like, you put all your money in stocks and bonds? Really? Most people would say the same thing about us. That'll change, and I think we're on the cusp of that kind of sea change. So anyways, not to wax poetic so much, but I don't know how you can get people to see that this is not just for the sky falling. It's good for that, of course, but it's also good for opportunities that will present themselves when the dust settles. And this, we'll find our way through this, but it's going to come at an expense. And I guess we'll see whatever that swan is that triggers the collective awareness.